Hello viewers, welcome back to the series Bhaskar's Insurance for You and Me. In the last two episodes, we had our discussions on the Employees Compensation Act. In continuation, we'll discuss about the employee compensation insurance policy and the different coverages provided under the policy to any employer. In case you have not watched the earlier parts of the video on employee compensation insurance, I would suggest you to please go through the Bhaskar's Insurance for You and Me episodes 28 and 29 before proceeding with the current episode for fuller understanding of the subject. The Employees Compensation Insurance Policy, earlier referred as Workmen's Compensation Insurance Policy, is an insurance policy meant to compensate the employer against its legal liability towards its employees. It provides indemnification to the insured employer if the employee sustains any injury by accident arising out of and in the course of his employment in the insured's business, and the insured is liable to pay compensation under any law specified in the policy schedule. Generally, the laws specified are Employees Compensation Act 1923, Fatal Accident Act 1855, and common law. Now, what are the different types of benefits that is available under the policy? Traditionally, there are two types of table of benefits provided under this policy. Table A benefit, where the legal liability for accidents to employees under Employees Compensation Act 1923, Fatal Accidents Act 1855, and at common law are covered. The Table B benefit, where the legal liability for accidents to employees under Fatal Accidents Act 1855 and at common law only are covered. That means Table B benefit does not include the compensation under Employee Compensation Act. While Table A policies can be issued to cover all types of employees, Table B policies are not issued if the worker is falling within the definition of employee or workman as per EC Act. Whether the policy is issued with Table A benefits or with Table B benefits, it can be checked based on the list of laws covered which are provided in the policy schedule or in the policy wordings. Now we'll look at what are the legal liabilities that are covered under the EC policy. What are the liabilities that are included for cover under employee compensation insurance? The various laws included for cover under the EC policies, as we have seen in the earlier slide, are Employee Compensation Act 1923, Fatal Accident Act 1855, and at common law. We have already seen in detail in the last two videos about the liabilities that are included as per the Employee Compensation Act or Workmen Compensation Act. As per Fatal Accidents Act 1855, whenever death of a person is caused by wrongful act, neglect, or default, the legal representative or dependent of that person is entitled for compensation for financial losses from the person responsible for the wrongdoing. So, this particular act is in respect of only death, and these claims are filed in civil courts. The common law refers to the general principles of law which was developed by courts over a period of time based on different case laws. In the context of an employee, it covers the employer's liability for negligence. If an employee is injured due to employer's negligence, the employee or his or her dependents can file cases against the employer seeking compensation under common law. The important aspect is that the negligence by the employer needs to be proved for getting compensation, unlike in case of Employee Compensation Act. The claims under common law can lead to higher amounts of compensation when compared to the compensation under EC Act or WC Act. So, when there is an accidental injury, the employee or dependent can prefer claims under different laws. Under EC Act or WC Act, if the worker falls within the definition of employee or workman, and the accident has resulted in either death or injury, and there is no need to prove negligence by the employer for claiming under Employee Compensation Act. Whereas under Fatal Accident Act, the claim can be preferred if the accident has resulted in death and negligence by the employer can be proved. The claim can be preferred under common law if the accident has resulted in either death or injury and negligence by employer can be proved. Since EC Act liability is a no-fault liability, the preference is to claim under EC Act. Now, what are the limits of indemnity applicable under this insurance? The limits of liability that is covered under the EC policy in respect of EC Act, that is Employee Compensation Act, is as per the compensation computed under Employment Compensation Act of 1923. We have seen the details of how the computation of such compensation can be done in our last video. There are few variations between the liability as per EC Act and the cover provided under different insurance product depending on the product, like which insurer, which product you have taken. For example, as we have seen earlier, the definition of injury under EC Act includes occupational diseases also. That is, any employee compensation claim due to occupational disease is also payable by the employer. However, in many of the insurance policies, the liability of insured due to occupational disease contracted by employee is specifically excluded through the policy wordings. So this cover, though the liability exists as per the Act, this cover is not reimbursed under such policies. But some of the insurers provide cover for occupational disease as an add-on cover on payment of additional premium, and the cover is subject to sublimits. Also, the WC Act provides for payment of actual medical expenditure incurred for treatment of injuries caused during the course of employment. We have also seen that the liability as per the WC Act for actual medical expenditure is without any limit. However, in many of the insurance policies, the liability towards medical expenses reimbursement is excluded in the base policy, and it is provided as an add-on cover on payment of additional premium, and the cover is subject to sublimits. Many insurers provide different options for limit of medical expenses to be chosen, and it is for the insured to choose. In respect of liability under the Fatal Accidents Law and Common Law, the amount depends on the legal awards. Some of the insurance products available impose per person, per accident, or per year limits of indemnity for these and specify these limits under the policy. Where no such indemnity limit is mentioned in respect of these claims, the cover under the policy is equal to the award amount without any ceiling. However, there are very few claims preferred under these policies, as the liability under these laws depend on proof of negligence of the employer, which is a very lengthy process, very lengthy and tedious process. Now, what are the exclusions under the employee compensation policy? The claims due to war and nuclear radiation related accidents, contractual liabilities, etc. are excluded, as in most of the other insurance policies also. The policies exclude liability if the employee is not in the direct employment of the insured, but is working under a contractor or subcontractor. However, this cover for contractor or subcontractor employees can be provided under the policy as an extension based on specific requirement and including the details of those employees under the policy. The interest and penalty imposed on the employer under any law in connection with employer liability is an exclusion under the insurance policy. So the interest and penalty portion will have to be borne by the employer. The injury sustained while the employee is at a place different from the place of employment or in the occupation different from the occupation declared in the policy. And also the accidents occurring while the employee is under the influence of intoxicating liquor or drugs is an exclusion. In this connection, please recall our discussion about death and PTD claims under EC Act being payable even if the accident is under the influence of drinks. As a result, this exclusion stands modified accordingly in respect of death PTD claims under EC Act. The next aspect which we will see is about a general myth being propagated. The general myth being propagated about this policy is that the EC insurance policy is a mandatory insurance, mandated legally, similar to motor third-party insurance. It is incorrect. The legal obligation under EC Act 1923 on the employer is only for paying the compensation to the employee dependents in case of employment and injury. The Employee Compensation Act or the WC Act does not specify that it is compulsory for the employer to insure this liability. It is an option for the employer to either settle his liability out of his pocket or opt for insurance policy to safeguard his or her finances. Now we will look at one important aspect of the policy administration. One of the factors to compute the premium chargeable under the policy is the annual wages of the insured employees. Since the number of employees and hence the wages can change during the policy due to addition or deletion of employees, this policy is generally issued on adjustment basis. The initial policy is issued on the basis of estimated number of employees covered and the estimated wages for the period of insurance. On completion of the policy period, the premium is recomputed based on the declaration of actual employees and wages for the period, and the premium is adjusted accordingly for the expired policy. In relation to this adjustment clause, some of the insurers are imposing average condition under the policy, as we'll see now. If the number of employees employed on the date of accident is higher than the number declared and covered under the policy, then the claim payable is reduced in such proportion of the number of employees covered bears to number of employees employed on the date of accident. This is one type of average condition. The second one is if the amount of wages declared for employees is less than the actual wages paid until the date of accident. In that case also the claim payable is reduced in such proportion that the wages declared bears to the wages paid. The third situation is where the liability of the insured for any claim by an employee is determined on the basis of wages which is higher than the wages covered under the policy. There the claim payable is reduced in such proportion that the wages covered under the policy bears to the wages on the basis of which the insured is held liable. So this average condition brings out the importance of declaring correct estimation of employees and their wages while taking the policy, and also declaring the increase in the estimated numbers whenever there is a possibility of increase in employee number or employee wages through endorsements. Such a regular action would ensure that the claim amounts are not adversely affected. So as an employer, when you buy an employee compensation insurance policy, please ensure to check on the following aspects so that you are aware of the cover provided under the policy. That is, the laws which are included under the insurance for protection. What are the laws which are included? And the cover for occupational disease and the sublimits applicable, if any. Existence or lack of cover for medical expenses and the sublimits applicable, if any. Need and availability of cover to the contractor's employees. The estimated number of employees and the estimated amount of wages insured versus the actual numbers. So these aspects will have to be thoroughly checked in the policy and to be taken care during the currency of the policy. So in the last 3 videos, we have discussed on the important aspects of Employee Compensation Act and Employee Compensation Insurance Policy in detail. Trust this is of help in understanding the cover and its suitability to your activities if you are an employer. I'll see you in the next episode with another new topic in insurance. Until then, bye from Bhaskar.